So far this year, I am pleased with the performance of my portfolios. Some of them have significantly outperformed the market and one of them has slightly underperformed the market. I try to be as transparent as possible on this channel, which you'll know if you've been following for a while. So today I wanted to share a breakdown of my returns, and then I want to compare my returns to some very known benchmarks. And lastly, I want to share with you which positions have been doing the best for me and which ones have not been performing so well. To make this a little bit easier, I have created a table. So we're going to walk through that. But if you like these types of videos whereby I share my portfolio and its performance and I give that insight, then please give this video a like so that I know to make more in the future. And also, YouTube is currently telling me that just under 59% of people watching my videos do not subscribe to the channel. So if you do find value and you enjoy watching this channel, please consider subscribing as it will help the channel continue to grow. So I guess I should start by giving some context before I share the figures, and especially for anyone new watching this channel. So I have 3 different portfolios. I have a portfolio on Vanguard. That portfolio only has one position in, and that is VUSA, an S&P 500 ETF. Now that account is a previous tax year's ISA. An ISA is a tax efficient account type that we have here in the UK, and we can only actively add money into one of those per year. So that just kind of sits on the side, it grows in the background, and I can't actively add more money. And then I have my current portfolio. That is the one I have Tesla and Palantir in, and I can actively add new money and make any changes that I want. That portfolio is on a platform called Trading 212. I love using Trading 212. I think that it's got a good user interface. You can get everything you need on it. Great customer service. I really like it. And if you want to open an ISA account or a general investing account with Trading 212, use my link in the description below, because using that link will give you a free share worth up to £100. So those 2 have funds and individual stocks in. And then my third portfolio is my crypto one. Right, so with that context out the way, now let's get into looking at how these portfolios have been performing this year so far. We'll start with my Vanguard account, which, like I said, only has one position in, and that is an S&P 500 ETF called VUSA. That's all that's in it. My Vanguard account percentage return, which is the return that account has seen this year so far, so from January 2023 all the way up until today, and we're not quite done with the year yet, is 16.73%. And then I've also calculated the annualized returns in this column next door. Please note that in order to do this, I have had to plug numbers into a formula that has assumed that for the rest of this year, because we're not quite done with the year yet, as I was just saying, that this position will continue growing at the same rate, which is an assumption, and of course that may not happen. The annualized return will be 17.35%. Of course, we can look back at this when the year's actually over and see what happens. These next 2 columns you can ignore for now. They will become relevant when we talk about my Trading 212 portfolio. So then what I've done is I've used 2 different benchmarks. I've used an S&P 500 benchmark, and I've used VUSA, which is the UK equivalent to VOO for you US audience. And I've also used VTI, which is a whole market index. Of course, S&P 500, the 500 or so largest companies in the US, VTI, whole market index. I wanted to include the 2 just to be fully transparent and give you guys a full picture of this. So S&P 500 percentage return, that again is the return for the S&P 500 this year so far. That is coming out at 18.09%. Annualized return for that benchmark, 18.76%. Now you're probably asking yourself, if you put the 2 and 2 together here, hang on a minute, you only got VUSA, an S&P 500 ETF in your Vanguard account, and you've compared that to an S&P 500 as the benchmark, but your portfolio has underperformed. How can that be when there's the same thing in those 2? Well, it's simply down to my averages. The average for one share of VUSA for me in that account is £62.68. This year, at the start of this year in January, one share of VUSA was worth £60.32. So you can already see that my average was higher than what the price of one share of VUSA started at the beginning of this year. And ever since then, the price has only been increasing. So you can start to see why my percentage return is not the same, and it's actually slightly underperformed the S&P 500 as a whole. Now, obviously, this is just a small time period. It's not even a whole year yet. annualized, I guess, as a whole year. But either way, when I look at my entire portfolio on Vanguard across all the years, it is really, really good. And you know what? I'm pleased with 16.73%. I think that is a very good return. And then we could compare it to the whole market index VTI. And what you can see is that the S&P 500 and therefore my Vanguard account as well, given what I've got in it, has underperformed VTI as a benchmark. Now let's look at my current portfolio, and then I'll share with you exactly what's in that portfolio, and you'll start to see why we're seeing the returns that we're seeing. So percentage return for this year so far is 24.5%. Now I could have made this video a few months ago. If I did, this figure would be at about 31%, which would have increased the annualized return even more. But I didn't because that video wasn't planned, and I'm just trying to be transparent. It doesn't really matter in the grand scheme of things because this is just a small time period compared to the long investment horizon that I've got. But this goes to show you just how much your portfolio overall could be affected if you are really concentrated into just a few positions, especially in my case, where those few positions are very volatile, high growth stocks. So just to give you some insight, my second largest position in this portfolio is Palantir. Palantir has done extremely well this year so far, extremely, and it's played into the returns that I've been seeing. However, just in the past month or so, it has been falling slightly, again, changing my overall return. So annualized return for this portfolio is 33.9%, which is absolutely fantastic. But like I said, it assumes the same rates for the rest of the year as we've already seen, and that may not actually happen. It could be that we end this year and the actual return for the year is 50%. It could be 25%. We don't know. We have to make them assumptions to actually include this column. But you can see that so far it has returned, my portfolio has returned a very decent amount. So now what I've done is I've compared to the S&P 500 and VTI benchmarks, but I've also decided to do that for the same time period. So let me just give you some context here. I started my Trading 212 portfolio in March the 21st this year. So it's been about 274 or so days since I started that portfolio. So what I've done is I've looked at that same time period from the 21st of March to today's date, and I've looked at how VUSA and VTI have performed over that time period. Taking VUSA first, over that time period, it's returned 15.2%. So you can see that actually my portfolio has outperformed VUSA, S&P 500 over the same time period, but it's not that long of a time period. So please remember that. Then I've done the same for VTI, and that came out at 19.21%. Again, my portfolio has outperformed. We will ignore the S&P 500 percentage return and VTI percentage return because my portfolio hasn't been accumulating since the beginning of the year, and these are what those figures are for. So we'll just compare to the annualized return. So my annualized return, 33.9%, annualized return for the S&P 500, 18.76%, and VTI basically 26%. So again, you can see that my portfolio has outperformed the market, but I'm not under any illusions here. I know that with how undiversified that portfolio is, plus the type of stocks I have in there that can move very quickly upwards or downwards, this may not continue. I am going to experience years where I am significantly outperforming the market, but I'm also going to experience those years where I am significantly underperforming the market. And unless I have that emotionless mindset and I can focus on the long-term horizon, it would be really, really painful. To give you some insight into my portfolio, which I do share on this channel, and I will make a portfolio update video very, very soon. But at the moment, I am heavily concentrated into two positions. So I have 31% of that entire portfolio in Palantir, and then I have 52% of the entire portfolio in Tesla, which is the largest holding. So you will already be able to tell that if Tesla or Palantir do particularly well, my whole portfolio moves upwards. Likewise, if one or both of those positions doesn't have a very good month, it really pulls my portfolio down. In terms of which position is up by the biggest percentage at the moment, for me, it's Amazon, and that's my third largest holding in the portfolio. But for most of the year, it has actually been Palantir. So just bear that in mind. It really depends on when these videos are being made as to what the total percentage return is of a portfolio. Now, in terms of my crypto portfolio, I hold all of my crypto in a cold storage wallet. I don't have any on platforms. And for some reason, I couldn't figure out how to just see year-to-date performance for this. So I've had to do a 1-year time period. So it's from December 2022 to December 23, which is obviously the month that we're currently in. And the percentage return on that is 147%, which is absolutely fantastic. But obviously it does come with its own risks. Now, this portfolio is not made up of Bitcoin. I've only got one position in there and it's not Bitcoin or Ethereum. So yeah, it is probably a little bit riskier. I'm okay with my risks. I've calculated my risks. I feel very confident and comfortable with that portfolio. But, I do obviously take on more risk than just investing into, let's just say, one ETF that is tracking the whole world. And that's a decision that is completely personal. You have to think about your dependence, your time horizon, how much money you have, how much you can afford to lose, your reasons for investing, everything. It all comes into play and no one strategy fits everyone. Obviously, we can compare this return to the S&P 500 or VTI. It does show you that just over 1 year, it was way better having your money in this particular cryptocurrency than it was anywhere else. But do I think that's going to continue? Who knows? We could be entering a new crypto bull run. But again, I would never put 100% of my money there because I just wouldn't feel comfortable doing so. I'll make a whole separate video about this, but just really quickly, what am I planning to do for next year? Well, I'm going to continue to invest as much as I can. I want to accumulate as many shares as possible in those stocks I have long-term conviction for. Those include Tesla, Palantir, and I've also recently added a new position to give me exposure to the genomics sector. I made a whole video on that and I'll link it on the screen now. At some point soon, I will probably do a little bit of rebalancing in my portfolio as well, because I'm very aware that this year so far, some positions have moved very, very quickly in the upward direction. And I just need to consider whether I'm happy and comfortable with the portfolio allocation that I currently have. I really hope you guys enjoyed this video. Share with me in the comments below how your portfolio has been performing this year so far compared to the benchmarks. Thank you for watching and I'll see you in another video very soon.